This is our weekly analysis of the S&P 500, and this is for the week ending on Friday, February 7th, 2014. And the first thing we do is we'll throw up a daily bar chart of the S&P 500, and this is an analysis chart, which you get under the chart menu, analysis chart. And what we've done is we've put up our three trend indicators, and they're two moving averages, a 29 period and 118 period moving average. And the reason we picked these two numbers is that the 29 is one lunar cycle and the 118 day is 4 lunar cycles. And the 118 day has been providing pretty good support on the S&P for several months. Let's inspect these bars, and we can see that the last time the vortex indicator spent any time with the red line above 0 was back in the end of August. And we're in that same situation now. Whether it continues or not remains to be seen. But because 2 out of our 3 trend indicators are bearish, i.e. price below the 29 period average, and our vortex bearish indicator above 1, that we're going to stay with the scenario that the February 5th low is a wave 1 bottom. And in an earlier blog post and video, we discussed what we expect out of wave 2. So we're operating under the assumption that this is a wave 2, which is a counter trend move, and that the next move down will be even more substantial than the January 15th to February 15th or February 5th downswing. Of course, that remains to be seen, but that's the assumption that we're going to operate under. So basically what we're doing is we're waiting for a short trade setup. The next thing we did was open up a S&P 500 65-minute chart and an analysis chart window, and we'll use a couple tools to see if we're on track. It's early, but we're just going to see if we're staying on track. And to do this, we use the updater. And the way you use the updater is for you have 3 different portfolios in which you can enter symbols. And these are the symbols that we follow, say, the most closely. And you go to Yahoo Intraday. That was portfolio 3. Click on portfolio 3, update all, and it'll go and download from Yahoo near real-time data. And you can do this as many times as you want during the day, and the data is within seconds or a minute of the real time. And next we want to make 65-minute charts. So in this case, we'll do it for all of them at once. You use the shift key to highlight all. We click on the 65-minute radio button, click on the make 120 bar files, and we're done. We now have a 65-minute GSPC or SP500 file, which we've already put up in the window. So now we'll use our Hearst method and Fibonacci time and price to see where we stand on our expectations that we talked about in a prior video. Now, if you don't know what cycle to use or what cycle period to use for the 65-minute bars, we'll just go to the Hearst method. We'll click the Fourier analysis button. We're going to use 65-minute bars, so we'll go to the Yahoo Intraday, the 120 bar directory, and click the S&P 500, and here we are. Now we know that you can read the cycles on the bottom here, cursor position. There's an initial cycle that hits the shoulder at about 32, but that's too short. So what we want to do is just use the cursor. We'll highlight the area of the line, and now we want to pick a bump in here, and it's the bumps that give us the cycles. So we'll put the cursor on this little bump right here, and you can see at the bottom, cursor position 88, that there's an 88 period cycle in the S&P 500 65-minute bars. So that's what we'll use. So go to Hearst Method, Displace Moving Averages. Let's pull that in view, and we're going to do an 88 period cycle. 88, click OK. And that puts up the displaced moving averages. And now we'll use our time price method. So we'll go Hearst Method, time price projection. We're going to click on the first intersection of the red and the green, the previous intersection of the red and the green, and the intervening low in this case. And that gives us a projection of about 1813 on February 10th for this particular swing. And we'll just do another method. We'll do the green projection, and we'll start at the bottom, go up to the intersection of the red and the green, and this gives us a slightly different little price, about 1813.87. So we're looking for this swing to get up to around 1813 early next week. All right, so let's get rid of those so we don't have to deal with them. And next we'll use our Fibonacci price. We'll do the decay retracement from the high to the low here on Feb. And we said in our prior video that we would expect price to retrace between 62 and 79% of the move down from January 15th to February 5th. And we expect to get up into that area fairly quickly, although we do expect to see an ABC pattern. So we don't think that even if price does get to that area on this particular 65-minute swing, that will be the end of it. And let's just do a quick Fibonacci time retracement. We'll do it from the high on January 15th, to the low on February 5th. And our expectation is that because 50% retracement would be the minimum that we would normally expect on a wave 2, that we expect the retracement to go until Friday, February 14th. So without making a future prediction, our expectation at this moment in time would be that this wave will continue up, possibly to 1813, possibly terminating earlier, make a move down, and make a move back up again that could end as early as Friday, the 14th next week, or more likely sometime between February 18th and I think, as we discussed before, March 11th. But all of that remains to be seen. Right now we're just developing expectations. Okay, in this section we opened up an SP 500 65-minute chart in a campaign window, or a campaign chart window, and that's really just to demonstrate some of the mechanics of the SEO, Simple, Easy, Objective trading system built into Swingmaster Chartist. And let's put up the breakout prices. And what we've done here is, so you can see, we had a change in momentum change on this bar right here from down, which is orange, to blue, which is bullish, putting us on alert that if there's a signal, you seriously want to consider taking it. And we can see that the signal in the S&P 500 was at 1758.73 was the signal price, and we had a breakout above that price on this bar right here, February 6th at about 9:39 a.m. And what makes this a valid buy signal, which we did not take, by the way, because we're going to stick to our bearish script. It's a valid buy signal because, number one, we had the change in momentum back here. We had the breakout price exceeded clear of the red and the green breakout bars. And it's important that price breakout clear of those bars, because when the breakout bars or when the breakout lines become tangled together, the chance of a whipsaw increases dramatically. So there was a valid buy signal. If you were a short-term trader, you could have taken it. But again, this section is simply to demonstrate the mechanics of the SEO trading system. Okay, just to review, a summary review summary. This is the daily chart of the S&P 500. 2 of our 3 trend indicators are bearish, so we're going to stick to the script that wave 1 has completed. We have a counter trend, wave 2 in progress, and we're looking for a short trade setup that we anticipate will happen or is likely to happen between, well, as early as Friday, February 14th, and possibly as late as March 11th, at a price somewhere between 1807 and 1826 in the S&P 500. So we did not take the long trade. We're going to wait for the setup, see what develops, and if we get a setup within our time frame, then we know that we're going to be good to go. And we reviewed just the last window to demonstrate some of the mechanics of the trade system. So in the first 2 windows, we developed expectations, but the third window, the campaign chart, complete with the breakout bars, the Elliott oscillator, is where the rubber meets the road, and this is where expectations stop and reality sets in. The information now comes from out to inside our heads, and we're going to take an objective signal if it presents itself within our price and time frame, certainly. Okay, hope you got something useful out of it.